Hey guys, what's up? My name is Matthew Spazziti here with New Millennium Wealth, and I hope you guys are having a great day today. So it's been a while since I last posted a video. I wanted to kind of explain why it's been a while and what's kind of been happening in my life and whatnot, and I wanted to kind of reaffirm my commitment to being here and creating content and stuff. It's just not going to be as easy. So as of October of last year, me and my wife finally had our very first child, which is absolutely amazing. We've been very, very happy, but we'd be lying if it said it was easy. So any of you guys out there who know about having children and anything, it's not the easiest thing. It tends to, I don't know, in a way, I guess, kind of disrupt your life. You're not used to having children. You're not used to having, a child that you have to take care of all the time, or you're not used to getting very little amount of sleep. Now, my child is 5 months old, going on 6 months, and we are actually getting sleep. So I wanted to start just getting back into the swing of things. My schedule is not anything what it used to be, so I'm still trying to figure all of that out, which is has been difficult to say the least. But I have discovered a way to work around when I can actually come here and continue to do these weekly market analysis videos and just give you my analysis. I also wanted to, give you guys a short update on where I am in my back testing. I have back tested 2 currency pairs so far, and so far they are, in fact, there's a positive expectancy. I back tested over the Aussie CAD and the Aussie dollar, Aussie USD, and so far it is profitable. Now I'm looking at, I believe, the CAD Swiss. I think that's the next one. I think it's the CAD Swiss that I'm on. And so far, we have a positive expectancy again, but I'm not finished with that one. I've got a couple more currency pairs. I think I'm trying to backtest over 10 currency pairs. So, I got 7 more to go after the CAD Swiss. So hopefully it will continue to perform adequately. The strategy in question is actually the strategy that I'm using on my TradingView account. Now, it's not back tested over all of these currency pairs. As you can see, there's a lot of currency pairs here. Ignore the dollar, Chilean peso. I don't actually trade that. I just like to have that up because I think it's interesting. But I think it's interesting to look at the inflation rate of the Chilean peso as opposed to the dollar. But anyways, the fact here, usually anything from the dollar yen all the way up to Aussie CAD are the currency pairs that I'm hypothetically taking trades on, right? It's not real. It's just analysis practice, just trying to, log in more time for chart analysis, and particularly live chart analysis, because there is something to be said for looking at a chart and actually performing analysis on live data as opposed to historical data, right? There's a huge difference between the two. So live data, you don't really know what's ever going to happen. You have no idea what's going to go on. But, with regards to all of that, historical data, you actually, to be honest, I don't really know what's going to happen with historical data, but I can take it forward at my own leisure instead of letting it play out. And sometimes confirmation bias does occur. Sometimes you see what's going to happen before it happens, and then you decide to take a trade. Now, in my back testing, I like to stay honest, and if I see what's going to happen, even if it's a profitable trade, I won't take it, because I will pretend as if I didn't know that's what was going to happen. Because I did, it kind of adulterates the data. So sometimes I may have, in fact, had a successful trade if it was real time, but because it was historical and I saw what happened ahead of time, I'm not actually going to take the trade. So sometimes my backtesting can actually appear worse than what it really is, and sometimes it can appear, well, I would say it almost always would probably appear worse than what it is, not necessarily better. But, that being said, though, it still has a positive expectancy, and I think that's still pretty positive. So anyways, I just wanted to kind of, let you guys know that, just trying to figure out my new schedule and everything, but I am still committed to being here. I'm going to try to do these weekly market analysis videos, as the name suggests, every single week. So, yeah. I just, I wanted to let you guys know that. I'm also working on a podcast where we'll be talking about entrepreneurship, trading, and economics, which that's pretty cool. That's called the Matthew Spizzi Program. It's posted on Podbean right now, but it's not actually out on the Apple podcast. There's only like 3 episodes, and there was supposed to be a lot more. I had a lot more in the pipeline, but again, ever since my wife and I had our first child, things kind of got put on the back burner. So I am starting to crack into that again and start to edit a lot of those podcasts and pumping them out. And I'm going to be trying to do at least 1 or 2 podcasts a week. So again, it's either going to be I'm going to be talking about either entrepreneurship, economics, what's actually going on in the markets and all that kind of stuff, or some trading principles and things of that nature. Those are usually the topics I'm going to be discussing. Basically, it's really more about becoming financially free by controlling the source of your income. That is the most important thing. That's why I'm doing this trading stuff. That's why I'm recording videos. I'm trying to control the source of my income, and there's so much freedom that it gives you when you control that income. So anyways, that being said, when all of that stuff kind of starts, building up, when I start building up my library of podcast episodes and I start getting it out on all the podcasting platforms, I will let you guys know, and I would be very appreciative if you go check it out. Also, don't forget to go check out my website. Let me see if I can find it here. There it is. Don't forget to check out the website, newmillenniumwealth.com. This is basically my blog. I post a lot of my YouTube videos on this blog. As you can see down here, this is actually a YouTube video, the power of backtesting, number 6, my weekly market analysis. Obviously, this will be number 7. I believe. And then there's lots of other stuff like investing, trading, which is best, what is technical analysis, how to become financially free. There's a lot of really cool content in here that we've started. There's also some, if you're interested in economics, I've also posted stuff on economics here as well. There's not as many articles there, I must admit, but there's definitely some stuff there, which economics is another field that I absolutely love. I think it's a beautiful topic, and I think if you're going to be trading and stuff, you really do need to understand why the markets move, because economics can help you explain why the markets move overall. So if you haven't checked it out, go check it out. And then also, if you're watching this on YouTube, which of course you would be, make sure to like the video and also subscribe to the channel. It really, really helps me. It really helps motivate me and ensures that you guys are enjoying the content. You're getting a lot of value out of it. So please, like the video, subscribe to the channel, and check out the website. All right, let's go ahead and hop into this. Now, I wanted to be very clear here. Let's check out the performance really fast on this trading plan. So far, trading view portfolio on the 60-minute time frame. There's a lot of losses here. There's some wins here, but there's a lot of losses. Where are we standing? Let's look at the equity curve. Currently, we are not doing fairly well. Now, we are above. We're sitting at like 31.83. And so we are actually above the $3,000 marker, which is, as you can see, that's where we're starting from. But we did hit a really big low here at 24.66. This is not a pretty equity curve. And there's a very good reason for this. It's not fully back tested. So we are probably trading on currency pairs here that do not have positive expectancies. They're just going to constantly deliver us losses and losses and losses. So this is a great example of why you need to backtest, because you don't know what the performance history is. It's not to say, even on one that produces a negative expectancy, it's not to say that you won't ever have winners. You just are not going to have very many. Okay, so you need to backtest your strategies. Come up with a strategy and backtest it. Trust me, guys, I have traded without a backtested strategy in the past, and it doesn't normally end well. You enter into what in economics they call the winner's curse, where you start winning over and over and over again, and then you think you've got the hot hands. You can do no wrong. You're on a roll. And unfortunately, what ends up happening is that you end up coming up against a situation where, well, you end up losing. And you're like, one loss, not a big deal. Then you have 2 losses. Then you have 3 losses. And then before you know it, you blew up your account because those losses, because you were winning the winner's curses, you started to bet more money on each trade every single time. And as you started to increase your position size, you weren't controlling your risk. You were unaware of the real risks of trading without a trading plan and without a back-tested trading plan R, and you end up blowing up your account because you ended up taking a lot higher risk than what you normally would have otherwise had you done the necessary work. So in economics, they call that the winner's curse, right? And, you know, ultimately, you know, this is what happens when you trade without a trading plan. Now, is it possible to trade without a trading plan that you've back-tested? Is it possible to actually make money? I'm not going to say that it's not, okay, because anything is possible. So sure, it's possible for you guys to trade and learn trading and not have to create, or at least not have to backtest a trading plan. But here's my ultimate opinion on this. While it is possible, it's stupid. Don't do it, okay? I don't mean to be rude or arrogant when I say that. It's a dumb idea. You work very hard for your money. You do not want to just throw it away. And that's essentially what you're going to be doing. Now, if you are one of the very few people who have learned how to trade and you never had a trading plan, you never had a backtested trading strategy, then you're an anomaly. But most people are not going to be in that boat. Most people are going to lose the bulk of the money that they put in the markets because they don't put in the necessary time to ensure that they have a historical, you know, advantage, I guess, you know, based off historical data. Now, granted, no, historical data is not indicative of future returns. Obviously, everybody knows that. I mean, everyone should know that. But it's something you need to keep in mind, right? It's something you absolutely need to keep in mind, that backtesting is incredibly important. And if you're not doing that, then you don't really know when the drawdowns or how bad the drawdowns can be. You don't really know the performance of the strategy in question. And you also haven't really developed the necessary emotional fortitude to trade it, because, you know, by going through backtesting, it's very painful to see all this red, right? I mean, it's incredibly painful to see this, particularly when you go through 4 wins in a row. You're feeling pretty good. You've got that, you know, hot hand mentality, winner's curse type of thing. Now here, I'm not increasing or decreasing position sizes. Now, I think it's called a mini lot size count. There's the standard, which is 100,000 units. There's the mini, which is 10,000. And then there's micro, which is 1,000. In the micro, there is only about, every pip equates to, I think, about 10 cents. In the mini, every pip is $1. And then the standard, every pip is like 100. Or, not 100, $10. I think it's, you know, you trade 100,000 units and then, in your lot size, and then every single pip represents, I think, $10 of gain or loss. So, you know, right here, we're trading with a mini lot size account, and we're not really increasing our position sizes. You know, it's only one position size, hence the 10,000 units. The lot size. And as you can see, you know, once you go through 4 winners and then you go through this, look at that. I mean, seriously, 6 losses in a row, and then it's win, loss, win, loss, loss, win, loss, loss. You kind of get the idea. And then you have another winner, and then you go loss, 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 loss. Now, granted, thankfully, this was a pretty big winner, and this was a pretty big winner. Now, $554 and $222 is pretty good, but they were enough to pop us back into the $3,000 range, but only for a short period of time. And then we had the $624 winner, which got us in back above $3,000 range, which is our $3,000 price level, which is really, really great. But we are profitable, but only just. So right now, the question is, how many currency pairs are unprofitable and how many currency pairs are profitable? We won't know until we backtest them all. And I'm only planning on backtesting 10. I may backtest all of these, but as of right now, my plan is to only backtest 10. So that being said, guys, I wanted to just also inform you and let you know that I'm not going to take trades that are over $200 in risk. So like this trade, $624 winner, we were risking $396. We're not going to do that anymore. Okay, we're only going to risk a maximum of $200 flat. We're not going to risk any, not even 201. We're going to risk 200 and preferably less than that. So like this one trade up here, 196, dollars of risk for 301. That's perfectly fine. Granted, it's a lot higher than what I would have liked, and it ended up being a loser, but that would be within the risk management that we're doing. And the reason that I'm changing that is because I realized that the strategy I actually created mandated that, but when I started taking these trades, I figured it wasn't back tested, who cares? I'm just going to take whatever trade I can get for the sake of analysis purposes. And while that's okay, I think I started to realize I really want to stay true to the actual trading plan that I created. So that being said, this is what we're going to do. We're not going to risk more than $200 per trade. That's it, because that's what we're going to do. And hopefully that will work out and that will control our risk a lot more, and that will hopefully prevent these massive swings. We don't have a lot of trades. Let's just check here that are over $200. I mean, we got the 214 here. 360, 252. So really, like, what, 3 trades that I can see all, just by glancing at this? Yeah, so 3 trades. There's only like 3 trades that were over $200, but they were all losers. $360, $252, and $214. I mean, they were all losers. Now, so if I had cut out the $200 trades, I would have gained all of these losses. I mean, seriously, 5 and then let's 6, 7. It's about almost $800 would still be in this account. We would be sitting at $3,900 if I was to cut these out. Now, because we already took the trades, I don't want to manipulate the data by taking them out. I think we took those trades. I took those trades. I think they should stay there, but we're not going to take trades like that again. So let's continue and look at the 4 currency pairs that I found today. Actually, I'm going to be completely honest. Oh man, I didn't actually find all of them. Let's see. I have 4. I got pound Swiss, pound pound Swiss. Pound Swiss was the other one that I took the other day. Let me pull up that pound Swiss chart here. Hopefully it'll actually be up. Okay, good. It kept all the drawings. Excellent. Okay. So we got 5 different currency pairs that we found. Now, the pound Swiss I actually found yesterday. I found all of these yesterday. I placed entries yesterday just in case they got hit. Thankfully, they all did get hit, and my entries are now on. So that's how a lot of these you might have noticed, particularly with, I think it was the CAD yen? No. New Zealand CAD? Nope. Euro pound. Sorry about that. The euro pound here, as you can see, I took the trade back here, which was yesterday at 10 a.m. However, I posted it today at 9 a.m., something like that. So in reality, you're probably asking, or probably more like 10 a.m., but still, you're probably asking, well, what the heck happened? Did you honestly take this trade yesterday? Yes, I honestly did. What I did was I did my Fibonacci measurements. Okay, I saw we made a new low here, so I found the most recent lower high right here. And I went ahead and I drew my Fibonacci retracement level, and we had a 618 retracement here. So I put the yellow line on, that indicates an entry. I put my yellow line on, so that indicates an entry order, and the entry order literally got filled that same day. I think when I found it, we were on this candlestick, and I didn't have time to watch it. I had to go take care of my daughter. I'm a stay-at-home dad, so that's another thing I forgot to mention. I am taking care of her in the middle of the day while my wife goes to work. So, my whole thing here is that I don't have the time that I once had. So I had to, come in here and actually take this trade, or at least put my entry on, and then hopefully come back the next day and see what happened. So we ended up getting filled here, which is great. So and it's looking like we're gonna make money. Now the euro pound is only gonna be making me about $76 if it does win. So it's not a big winner, but hey, It's good for morale. It's really nice to get that winner in. So, I think this one's pretty strong. However, as you can see, we are kind of getting rejected at this resistance level. This support level right here. So, and this support level was hit 1, 2, 3, 4, at least 4 times. So we'll have to see if the support level holds or if we're going to continue to fall through the support level. I'm kind of thinking, based off of the resistance that we received up here around the 8860 even handle number, you know, what we can really see here is that we got rejected 1, 2, 3, 4, 5. If you want to count both of these, you could say 6 times. We got rejected a lot. And so that's a pretty strong bearish indication that we're going to continue to head lower. But we're just going to have to wait and see. Let's go to the pound Swiss, which is what we were on originally. Pound Swiss, as you can see, we're kind of bouncing off a great support level right here at 119.55. And it's not really an even handle number that I can see here, but this is pretty good, though. I mean, we bounced off of it, let's see, once, 1, 2, 3, 4 times. Four times is pretty good. So hopefully this will continue higher. It's looking like it might, but at the same time, we do have a resistance level. It's a minor resistance level, but we do have one that we're coming up against, and we haven't really been able to break above it yet. So if we break above that, I think there's a good chance we're going to hit the target, but we could get rejected and roll right over. Now, for the pound Swiss, we are risking $90 to make $122. So hopefully it ends up winning. I could definitely use a 122 winner. That would be great, but we'll just have to wait and see. Here we got the pound dollar. All right, look at this. We have a triple top right here. All right, if we look at this, we zoom out, we are definitely bearish. We got a triple top right, well, we were bearish. I would say now that we broke above here, we've been bullish. Now we broke below again. So my thought is that we're going to continue lower from here, especially after this massive bearish move, but I don't know for sure. Right? I mean, I hate to say this because I say this all the time. We're just going to have to wait and see. No one's got a crystal ball. So we could have broken below and then we could continue higher. This could be a false triple top. It does appear to be a triple top. The V of the top the neck here ended up getting broken, although the neck is really more synonymous with a head and shoulders pattern, which we do not have here that I can see. But we have a triple top right here, and this is the V of the triple top, and it was broken down here, actually, well, down here and here. So I'm taking the bet that this is going to continue lower. However, we already closed above the 123.84 level, so I don't really know if that's going to happen. This could continue to rally, and we could end up getting stopped out. This could just simply, there are lots of triple tops and double tops that really are not that consistent. If you actually have ever backtested these types of reversal patterns, and I've backtested double tops before, and they're really not consistent on their own. They do not win a lot. So, at least from my experience, they don't. So it's very possible to get a double top or a triple top, have it break below your V, and then ultimately rally on you. And the double top or triple top was really not an actual reversal sign. A triple top is I like to think that the triple top is a bit of a better indicator, but we don't know. But I've never honestly tested them. So another thing is that we could also look at this here. I could just draw this in real fast. If we want to look at it this way, this was an ascending triangle where we got rejected off the same flat price level, but we ultimately were bouncing higher, but we were bouncing off of this and we were getting higher and higher and higher. As you can see here, we were pretty low and then we were higher here and then we were higher again here. So, generally speaking, that is a bullish indicator. That is an indicator that eventually this flat price line up here is going to break or could break. Now, clearly we broke down below, but this could be a false breakout. As you can see, we also had a support level right here that we bounced off 3 times, and now we're going higher. And we've also closed above this. So honestly, the more I look at this, the more I'm kind of thinking it probably isn't going to be a winner, but we don't know. It could be. It could be. You never know. So, but hey, we had a break below, close below. So we retrace them back into 618 fib retracement. We take the trade. That's the strategy. So we're just valuing the trading plan. We're just following the trading plan, right? All right. Now euro pound. We already talked about this. I hate those ads that keep coming up. I really do need to get a pro account so that I can stop getting those ads. But right now, with all the market uncertainty around this, looming recession or the recession that people claim that we're in and whatnot, I would prefer to keep my money kind of tight like most people do and not spend as much until I know that my wife's job is secure, which so far, so good. But I don't really want to spend money until after everything is kind of blown over and we go from there. All right, let's look at the CAD yen. The CAD yen, we created a new higher high, higher close up here. As you can see, we retraced and then created another new higher high, higher close. We also had a double bottom right here off the back of a small bullish or a small bearish retracement. So I think it wouldn't be that hard to say that this higher high here, the 78.47 level, is going to be retested. I think that's going to happen. So what I did was I drew my fib retracement level or tool from this low to this high, and our 618 got hit. Now, again, just like most of these other trades, I placed my entry on early that day, and we were sitting somewhere up here. I didn't know if we were going to get down there. And then I came in today and realized that we did. So, hey, that worked out great. So hopefully, there's not a whole lot of risk right here. The CAD yen, we're only risking about $59 for $76. So again, it's not a lot of money, but I mean, this is all hypothetical money, guys. You guys know this is just my analysis, but I like to treat it and pretend like it's real money, but it's not. But still, the risk is only $59. So if we lose, not a big deal. But still, it would be nice for consistency purposes. So let's kind of move on to the New Zealand CAD. All right. So New Zealand CAD, if you zoom out, we've been bearish for a very long time. Then we had this massive pop up here in March. And then we kind of collapsed. So, and we've been kind of trending higher ever since. We've been bullish right here. And now we're making new lows. It's, it's kind of looking to me like we're going to continue to go lower because we were going lower before, but I don't know. I don't know for sure. I know that we had our previous lows here, and then we made a new lower low down here. So I drew my fib retracement tool from this swing high to this swing low, and I got my 618 fib retracement. We came up here, we hit it twice, but I found this rather late, and I wasn't honestly watching at the time. So we were down here when I found it yesterday. So I placed my blue line marking where I had found it, the day that I found it on, and or at least the hour, because we're on the hourly chart. And what I did was I placed my entry hoping that it would get filled while I was sleeping and going about the rest of my day taking care of my daughter. And it did. And we got filled right here today at 7 a.m. So I placed my stops and my targets, and voila, we are now entered. Once again, though, as you can see, this could just be a complex pullback. As you can see, we had a pullback here. And we had a second pullback here after we had a rise up here. So this is a 2 drives complex pullback. And this very well, or at least this is what it could be. If this is simply just a pullback and we're going to continue higher, then this is going to stop me out. We're going to try to get up here, and it's going to rally and stop me out. If that happens, what we would want to see is we want to see it continue a little higher and then retrace, and we could reverse trades here by drawing a fib retracement from this swing low to the swing high, put our entry here, and go long. So that's something we could do. So actually, I'm going to go ahead and leave that there because we might want to enter a similar trade if this gets down and looks like it's going to stop me out if it continues higher. Honestly, though, I kind of misspoke. If it does continue higher, even if it was to go under my current entry point, then I wouldn't really know if I would consider taking the opposite trade here. But I'm going to leave it on here just in case. I will put an orange line through it just to kind of highlight that it's a potential trading opportunity I might want to look into. The orange line is just an indicator for me of a secondary entry that I might want to take, but separate from the original entry, the yellow line that I've already taken. So right here, this is the New Zealand CAD, and we're risking about $91 to make 121. So if this does continue to be bearish, then hopefully we'll end up making that money, and that'll be great for the overall portfolio, the analysis we're doing. So anyways, that kind of wraps it up. You know, those are all the 5 currency pairs that I was looking at, and yeah, hopefully that they will end up working out. Hopefully they'll end up doing really well. But I did kind of want to talk about the crisis that we're going through right now. I really wanted to just say, guys, that right now is a pretty difficult time. There's a lot of people who are out of work. There's a lot of people who are afraid of being out of work. My wife and I are one of those. You know, we are afraid that my wife could lose her job, and if she does, that wouldn't be positive for us. You know, we just bought a house and we just had a child. Now, we've done our budgets. We're doing a really great job at trying to become debt free. And, you know, if you don't want to own your business or if you don't want to trade, if you don't want to do anything else, and I'm assuming that if you're watching these videos, you want to be a trader, right? You want to learn how to trade, and that's great. Treat your trading like a business. But let's say you didn't want any of that. Let's say you get into the throes of trading and you're not really sure this is something you want to do. I would like to give you some advice on a personal finance level. Try as much as you can to get rid of your debt, because that will help you to better weather the storm. If you can get rid of your debt, you're increasing your cash flow. Now, a lot of people say that cash is king. That is not true. Cash flow is king. Okay? Cash is not king. Last I checked, cash is deteriorating in value 2% every year from the official numbers of the Federal Reserve. Now, I don't believe that those numbers are accurate. I think it's worse than that. I think we're looking more at a 6 to 8% inflation rate year over year, but nobody really knows, and there's no real way of honestly calculating. Any form of calculation that's out there is merely just a guess, because the inflation rate in one state is going to be different from the inflation rate in another state. And then the inflation rate in one city within that state is going to be different from the inflation rate of the same product or the same service in another city in the same state. And, you know, so on and so forth. But price inflation is also what is really deteriorating. Well, actually, it's monetary inflation that deteriorates the dollar, the increase in the monetary supply that eventually causes price inflation. But we'll talk about that in another episode. You need to increase your cash flow. You need to, ultimately, what you really need to do is control the source of your income. That is the most important thing above all. Controlling the source of your income is incredibly, incredibly important. And if you don't have control of your income and you're relying on a company to pay your wages, then you are dependent on that company. Now, I'm not anti-corporation or anything of the sort, but I've also heard a statement before, and I think it's very, very true. When you die, the company that employs you is not going to be at your funeral. They're not. Maybe some friends that you made when you were working there, they might, but the company is not. It's not like they're going to have the CEO there with, honoring your death. You're just going to have friends and family. Now, that may sound like a very morbid, a very depressing thing to say, but isn't it true? There are companies that genuinely try and take care of their employees, but in the end, they don't really care about you, despite what they want you to think. The government doesn't care about you either. Politicians don't care about you. Your companies don't care about you. Your friends and your families, they probably do. If you have good friends and families, and let's hope that we all do, right? But where you work and the governments, they don't care about you. That's the truth. Now, they do a lot of things that may look on the surface like they care about you, but in reality, those things that they do most of the time ends up hurting you from a government perspective. From a business perspective, they give you benefits and they do other things, but again, some of those things are not actually within your self-interest. I mean, getting a 401k, having a 401k where you don't even know what you're invested in most of the time. You don't know what fees you're paying. And then on top of that, when it comes to your 401k, companies use the 401k as a justification for reducing the amount of money that they have to pay you. What if you took that 6% match, the contribution that you made, and you just say, I want that in income. I don't want it put in my 401k. I just want you to pay me that in my checks every month. A long time ago, that was the case. And then they came up with the 401k to kind of take over the pension plan idea. And that's kind of what they ended up doing, and to help reduce your pay. Now, granted, that happened years and years and years and years ago, or it happened a long time ago. So, and that's just the way things are now. But the fact remains, it's not free money. The contributions are not free money, so don't believe that. But we're kind of getting off topic. Ultimately, you need to control the source of your income. And if you can't do that, then the best thing you can do is try to become debt-free as much as possible. Now, I know it's hard. Most people live paycheck to paycheck every single day. And if that's you, then trading I can't really advise that you get into this. Because money management, your personal finances, needs to be something that you do very well, or relatively well. You need to have savings. I mean, look at this chart. Does this look like consistent income to you? Now, granted, I know that this is not a back-tested strategy. I'm well aware of that. But does it look like it's seriously, does it look like it's consistent income? No. I'm actually going to pull this one up right here. This is the 2786 strategy. This is basically a double top strategy that I told you that I back-tested. Look at it. Max drawdown, 14%. Consistency, 24% of the time it won, which means it lost 76% of the time. 76% of the time it lost. 76 losses, 24 winners. Right there. Max loss, $427. That was the max drawdown. So it's not like we lost that in one shot because we didn't risk over $200. And again, as you can see, we were risking like maybe 30, 40 bucks, $18, $20 per trade. It's not like we were risking a ton of money, but just death by 1,000 needles is essentially what it was. Let's look at the equity curve. Yeah, nothing but a steady decline. And we were seeing a bit of a rise here. Maybe we would have gotten higher, but in the 100 trades that I took, nothing. We were not able to get up to the original area that we started at. Now, for those of you who can't see this, because some of this I'm actually going to take and put in my podcast, because I think these are pretty good lessons to talk about. Trading is not consistent. Okay? It just isn't. And you need to understand that. You need to manage your finances well. If this is something you want to do. And one of the best ways to do that is to be careful about the debt that you're taking on, build up your savings, and try to kill the debt. Get rid of it. It's choking your life. You need to pay that debt off. Become debt-free. Okay? That is incredibly important. And again, really the best thing you can do to try and better handle all this is to become financially free. Control the source of your income. Trading is a great way of controlling the source of income. Look, you don't have to sell anything to anybody. I don't have to sell any products to anybody. I don't have to sell any services if I don't want to. I can just trade. I can trade and come in and out of the market, and I can make money. Or I can make more money than I'm losing. That's the idea behind trading. You don't have to sell products or services. Okay? It doesn't matter what market condition you're in. If you are a trader, you can survive and thrive in any market condition. Now, granted, your trading strategy may not always work with regards to every single market condition. For example, this trend continuation strategy that you are seeing me trade, this is a strategy that works really well in a trending market. It doesn't work very well in a consolidating market. It can, not to say that it can't have some winners in a market that's consolidating, but it's not going to have a lot of them. So again, you need to take control of the source of your income. I don't know how many times I can tell you that. Whether you want to blog, like I'm trying to do with my New Millennium Wealth website, whether you want to trade and learn the skill of trading, whether you want to do a YouTube channel or a podcast, these are all things that I'm doing. I got a YouTube channel. I got a podcast. I got a blog going. I'm learning the skill of trading. I've got like 4 different things that I'm doing. With a blog, you can do affiliate marketing. You can sell other people's products and services that you have used and you genuinely like and you genuinely believe are good products. You know, with regards to podcasting, again, you can do affiliate marketing. You can get sponsors on your show once you start accumulating enough viewers and listeners. YouTube, once you get over 1,000 subscribers, you can use Google AdSense. You can monetize your YouTube channel. Ultimately, you're not going to make a lot of money unless you get a lot of views and a lot of clicks on that, but you can use YouTube once again to sell sponsored products or maybe have affiliate marketing programs through there. These are really great things. So guys, look, times are tough and people are scared and they don't really know what to do. Don't look at this as a time to be depressed. This is not a time for you to, dig your head in the sand and be depressed and curl up in a corner and just say, what's the point? This is not the time for that. You need to start working. You need to reinvent yourself, learn a new skill. Look at this as the best opportunity, an opportunity of a lifetime. Look at this as a way for you to get out there and make something different of yourself. Let's say you're in a career you hated anyways. Go into a new career. Go start taking courses. Go to like Skillshare.com. I'll post an affiliate link in the description below if you're interested and you want to support what I'm doing here. It's a pretty cheap subscription to be in. It's not that expensive, but there's tons of courses from website design to copywriting. I'm pretty sure there's even trading courses on there. I've never really taken them. I've always gone to Tier 1 trading for a lot of my stuff with Akil Stokes and Jason Greystone. And again, I'll post a link in the description below if you're interested in that as well. They're a bit more expensive, but they do teach you. They're amazing with the knowledge that they can teach you guys. But the fact remains, this is an opportunity for you to reinvent yourself. This is an opportunity for you to learn a new skill, to become the person you really want to be. And hopefully on that note, you'll want to control the source of your income, which I think is absolutely amazing. I know I say that all the time, but seriously, it's incredibly important. So that being said, guys, I hope that message resonated with you. I hope that was positive and not depressing. I certainly did not intend it to be depressing. And I hope that you guys ultimately will heed what I'm saying, listen to what I'm saying, and get out there and strive for something better. Strive for increase in your life. And just work really, really hard for it. All right, guys. Well, hey, we have already gone a long time in this episode. I hope you enjoyed it. I hope you got a lot out of it. I hope you enjoyed the chart analysis if you were listening to that part of the episode, or if you were watching that on YouTube. If you are listening to this from the podcast and you're interested in trading, come to the YouTube channel, subscribe, like the videos, and I try to put pretty good free content out there for you guys to kind of show you what I do and the process that I go through. I'm not a consistently profitable trader yet. This is my journey to become that. You guys are seeing me go through that journey, and I think that's incredibly important because most of the time you don't actually get to see that. You only see people when they're already successful and they have this really, really beautiful office somewhere in a building that they're leasing, and they're, they got computers and they got all this great, cool stuff, and they got, employees that are working from them. Generally speaking, that's what a lot of people tend to see, but I wanted you guys to see everything from the ground up. I wanted you to see me go from not making anything, which I'm not right now. Not saying I haven't made any money, but I'm not making anything consistently in my trading. I have made money in my trading, but it was on it was not on a back-tested strategy, let's say that. And I ended up making money. I didn't end up losing, but I decided to call it quits and pursue how to actually trade and to pursue a trading plan and backtesting and all of that kind of stuff. So, but that was in the past. I want you guys to take this seriously. Trading is not a hobby, it's a business. So if you're interested in that, go check it out, learn as much as you can, and then consider taking a course. Learn as much as you can for free, gobble as much information up as you possibly can, and then consider taking a course from somebody. I would recommend Tier 1 Trading. They're absolutely amazing. You cannot go wrong with them. Akil Stokes is awesome. Jason Greystone, he's in the UK. He's also great. There's so much, Darren, he's the guy, I think he's kind of the owner of the company, or at least he part owner. I don't know if they've partnered or whatever with it. I'm not entirely sure exactly the situation with them, but it's a wonderful company. It's expensive, but it's wonderful. And it's it's worth the money. The education is worth the money. They don't simply teach you a trading strategy. They teach you how to create trading strategy. They teach you how to do a ton of stuff. And hey, I'm going to be posting a lot of free content here. I will eventually be posting some free courses at some point in time in the future where I will show you how to read a price chart, how to backtest a trading strategy, how to come up with a trading strategy, and how to recognize some patterns and things. And that would totally be for free. So that's something I'll be doing sometime in the future. But with my daughter, I'm not entirely sure when I'm going to get around to it, but I'm going to try to get around to it as soon as I can. So anyways, guys, hope you guys have a great day. I hope this wasn't a depressing message for you towards the end of the video. I hope you guys really enjoyed it. And I hope it was really more uplifting. Look at this as a great opportunity to reinvent yourself. All right, well, do me a favor. Get out there, share the show, share the podcast, share the YouTube channel. Help me grow this community of people and help me spread this message of financial freedom to everyone. As many people as who are willing to listen. And if you'll do that for me, I'll see you guys in the next episode. Remember, know the risks, plan accordingly, and have a great day.